Good afternoon. Ken Jolliffe with BIS Commodities here in Cedar Rapids, giving an overview for the commodity markets on the week of November 20th, a week that was very quiet. News was very stale as we went through the week. Trading ranges were very small. We'd seen some of the smallest trading ranges in the grains in the past 9 years. For the week, December corn was up 5.5 cents. Wheat was steady. Beans down about 6.25 cents. Livestock side of things, the hog market was up $2.36. Live cattle down 53 cents. Feeder cattle down $1.13. Kind of review the commodity corn side of things here this week. Like I said, very quiet, very narrow trading ranges. We are seeing the domestic corn basis pick up some, anywhere from 3 to 5 cents as we go across the belt here right now. Very, very slow cash sales. The export market, the weekly sales did show an improvement over the previous week, so we are now seeing values at the Gulf become more competitive with the world values. Customers like Japan, Korea, and Mexico were in booking this week. Mexico came in midweek with a huge sale that will be on next week's reporting system to take a look at. So it is good to see the export market start to pick up a little bit. Values down in South America are starting to firm up some as they are entering the period where they got winding down on their export program as far as for corn. So if we can continue to see values like we've got them right now, and then you maybe even see a downtick in this dollar trade, we maybe could see some more export business coming into the corn next week. Soybean business still primarily dominated by the Chinese. We've seen some daily sales here this week. We sold about 66 million bushels of beans last week, primarily again to China. The one thing that is kind of dogging the bean complex some here right now is we see the weaker meal basis, across the western corn belt. We're also seeing the trade being somewhat concerned about the Argentine elections, which will be Sunday. The front runner for the presidential position down there has made statements that if elected, he will cut the export tax on soybeans and soybean products. That tax right now is about 35%. So that has put pressure in the futures market with the idea that if that happens down there, that could put some additional supplies out into the world market. So we'll have to take a look and see how that starts out next week. Other than that, like I say, very, very quiet, very stale week. In the grains, we'll have the shortened week next week with Thanksgiving on Thursday. Livestock side of things, we continue to see the futures market trade wildly. We saw some limit moves here again this week. Now, we did have the cattle on feed report this afternoon, which was basically as neutral as possibly could get. On feed at 102.1, placement is 96.3, marketing at 96.7. So once again, a Friday afternoon report for the cattle market that probably means absolutely nothing going into Monday. Cash markets were mostly steady week during the week for both cattle and hogs. Supplies are still running plentiful across the belt for those. We may see a little bit of a slowdown with the weather issue here this weekend as we're seeing a winter storm watch, for heavy snow across much of the upper Midwest, particularly north of Interstate 80s across the belt. So one thing to watch on the hog market, technically wise, we did see a weekly reversal on the December contract that may bring the technicians in early next week to support the futures market. So that'll be something to watch, as we begin next week. So as I say, a very quiet, very stale news week. I would look for a continued narrow trade going into the Thanksgiving holiday week next week. So with that, have yourself a nice, safe weekend.